Mainstreet achieved its fourth consecutive quarter as well as annual results of double-digit growth in all key financial metrics. In 2022, Mainstreet acquired 815 units at a purchase price of $91 million. Subsequent to Q4, we continued our counter-cyclical and opportunistic acquisition strategy by adding another 261 apartment units at a total cost of $33.6 million. Year to date, acquisitions total 1,363 units or $148.6 million. The lowest cost asset acquisition was $64,000 per suite in Regina. As of now, Mainstreet owns 16,512 units valued at $2.8 billion. As of Q4, Mainstreet maintained a liquidity position of $360 million, which will continue to support our growth strategy. Our management team has worked hard to safeguard Mainstreet from rising interest rates by locking in 99% of our debt at low fixed rates of 2.56% with average maturing term of mortgage loans of 6.2 years. While we anticipate that the interest rate hike will plateau in the medium term, we also believe that we will benefit even if inflationary trends persist, given that we have taken full advantage of the last few years of low interest rates, allowing us to expand our portfolio at highly competitive costs. Now, let's take a look at some of the key metrics from this quarter. Compared to 2021, overall rental revenue is up 13% to $180.6 million. Rental revenue from same asset properties is up 3% to $159.1 million. Net operating income from operations is also up 12% to $109.7 million. Meanwhile, the NOI from same asset properties is up 4%. Funds from operations also increased 11% to $52.8 million or $5.65 per share. Mainstreet's overall operating margin is sitting at 61% in 2022. Operating margin from same asset properties improved to 62% from 61% in the previous year. The vacancy rate from overall operations is 7.2%, a decrease from 2021 when vacancy was at 8.9%. In Q4, the vacancy rate from same asset properties sits at 4.9%. The corporation has seen strong rental housing demand throughout the overall portfolio, especially in Alberta. As of September 2022, vacancy in Mainstreet's Calgary portfolio was at 2.3%, while the Edmonton portfolio vacancy also improved by 6% over the year to 6.6% in September 2022. Subsequent to Q4 2022, Edmonton's portfolio vacancy rate further improved to 5%. Even though as of Q4 2022, 14% of the Mainstreet portfolio was going through the stabilization process, once stabilized, we remain confident that same asset revenue, vacancy rate, NOI, and FFO will be meaningfully improved. Mainstreet has built its portfolio through the acquisition of existing properties at prices that are below replacement cost. Inflation, as with all aspects of the economy, will drive up the cost of building new rental properties. We believe this only deepens Mainstreet's leading position in the rental market. We are cautiously optimistic that we can boost cash flow in coming quarters. In the BC market alone, we estimate that the potential upside for NOI growth is approximately $19 million, which mainly represents leveraging our mark-to-market gaps. Management also expects that strong immigration and economic recovery in Alberta and Saskatoon will accelerate our NOI catch-up.
To stay up to date with more Mainstreet Equity investor-related news, follow us on LinkedIn or visit us at mainst.biz/investors.